Stocks filter between gains and losses as market digests a range of comments from Trump and Powell ahead of the long weekend. IT and metals are the big losers, while financials and utilities eke out gains. Mid-caps fare better. Private investors Warburg Pincus and ADIA will invest 7,500 crore rupees in IDFC First Bank via convertibles, translating into an eventual stake of near 15%. CEO Vaidyanathan says that he sees strong growth ahead, though the fundraise will return dilutive in the short term. Wipro delivers a weak Q4 and guides for a decline in IT revenues in the first quarter of FY26, while Sonata Software alerts on likely lower revenues from its top clients. These vindicate views of analysts warning of an adverse impact of global uncertainties, IT stock slumps. Need to move from thinking of minimum compliance to maximum governance, says SEBI Chief Tuhin Kanta Pandey. He calls governance a strategic imperative for the regulator at the time when Gensol Engineering is hogging the spotlight on misgovernance. Hello, good afternoon. You've tuned into Business Lunch, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala, and thank you so much for tuning in as always. Markets almost near today's highest point is what it's trading at, 23,700. About that mark is what the Nifty is holding on to. Sensex seeing gains of more than 1,100 points in today's trading session. So interesting move that is coming in for the benchmark indices. Let's look at what is happening in terms of the contributors and who is giving the most in terms of contribution. We have the private bank side. Yesterday also we'd seen private banks do well. Today also. So ICICI Bank, HDFC Bank among the top contributors for the Nifty 50. Reliance also is there and Bharti Airtel. So good names coming in there. Heavyweights coming in like Reliance as well. So support coming in for the market. As of now, 292 points uptick for the Nifty is what we're seeing. Advance decline ratio is also what we should watch out for as well. And that is in the favor of advances versus declines. And in terms of banks also, private banks seeing a clear up move like you saw on the screen as well. Let's move on and talk about the mid and small cap because that is doing well in today's trading session. We have the Nifty mid cap holding on to gains of almost 5/10 to 0.6% as of now. So 0.5% gain for mid cap. Small cap also is managing to hold on to good gains of almost 0.5%. So interesting moves that are coming in terms of the broader end of the market. Not an outperformance today, but that is something to watch out for. IT, that's the top drag coming in on the sector performance. So look at the Nifty IT of TCS, Wipro, HCL Tech, Mahindra, all of them seeing a sharp fall as well. And Wipro, obviously, in terms of the numbers that they reported and commentary that has come in, has not been something very exciting. But talking about Wipro, we do have, the analysis that is coming in from Wipro. And Rima is here to give us the update in what has happened in Q4 for Wipro and what are we watching out for now.
Oh, indeed. It's taking it on the chin. And now the Nifty IT index is down 25% so far this year. And it's still about 5% away from its 52-week low. Let's run you first through the news flow. Now, Wipro's under pressure because its Q1 guidance disappointed the street. Much lower than street expectations at -3.5% to -1.5%, which means your best case is revenues for Wipro in Q1 declined by 1.5%. Sonata then issued a revenue warning. They said revenues from their top client will be lower than what they were earlier anticipating. And now the street is saying that perhaps Sonata's revenues in the June quarter could decline by high single digits. Now you've got Infy, which reports numbers post-market hours. And the big question is, will they guide or will they not, given the uncertainty? And it's hard to have visibility about the second half of the year or even tomorrow. So if they don't guide, that means the uncertainty lingers on for the next 3 months. And so far, both TCS and Wipro, which have reported numbers, have missed the mark on the top line. Both of them reported a revenue decline in the March quarter, revenues falling 0.8% on a quarter-on-quarter basis. They also highlighted in their commentary that clients are turning cautious. They're taking a measured approach, at least when it comes to discretionary spending. There are instances of projects being put on hold, some decisions being delayed. So all that is hurting demand. So today you've got Infy and Tata Elxsi, but over the next few days, you will have numbers from Mastech, HCL Tech, LTI, Mindtree, and the following week you also have Tech Mahindra, Sign, LTTS, Emphasis, Persistent, basically the rest of the pack.
Absolutely, Reema. Thank you so much for that. But let's move on and also listen into what the management of Wipro had to tell us on the quarter gone by and the outlook going forward amid the global uncertainty.
There is definitely uncertainty in the market. We are hoping, in the next few months, things would settle down and the clients will come back and restart the discretionary spend. I think what we are seeing more and more from the clients is the new projects, discretionary spend, when they need to start them. I think that's a delay that I'm seeing. But overall, if I look at our pipeline, which is very robust at this point in time across Americas and Europe and APMEA, and majority of those deals are also more around the cost transformation, influencing through AI optimization and improving the customer experience. Those deals to me will continue because that's going to help the client in a situation which is a lot more uncertain for them.
We've seen fixed price programs improve their productivity. We've seen acquired entities improve their profitability. We've rationalized overheads. We've also rationalized staff who are non-client facing in some of the functions and roles in G&A. So all around, it's been a very solid performance in FY25. We have said our endeavor would be to hold it in a narrow band. So yeah, 17% plus. There is pricing pressure for sure. Is this any worse compared to how it was, let's say, a few quarters ago? I'm not sure. How do I contextualize it? But I do see that increasingly a lot of the large deals are vendor consolidation and cost takeout. So yes, they're quite competitively fought, and therefore it does have pressure on margins.
And now let's move on to a CNBC-TV18 news break that was confirmed. IDFC First Bank's board has approved funds, raising of funds of up to 7,500 crore rupees. Now, private investors Warburg Pincus as well as ADIA will invest in the bank via convertibles, translating into an eventual stake of near 15%. Earlier today, we spoke exclusively to V. Vaidyanathan, who is the MD and CEO of the bank, to give more details about the fundraise. Listen it to what he had to say.
I think the bank needed capital. So I messaged them, I reached them directly. I told them, please, I'll be really happy if you came in. And of course, then we pitched the story. We told them how the bank is set for a phase 2 of growth, how we can create really phenomenal value in the next maybe 5, 6, 7 years. And they are long-term investors. They can see that they made a lot of money last time. So they felt excited to come again. This will have a dilution of 15%. But really, Lata, I want to just share one thing to you and to all investors hearing this program, that the main thing is that the bank has a phenomenal model. Otherwise, our operating profit could not have grown from 750 crores to 6,000 crores, like 16.4 or 5 right now, and it will go to 18 point, close to like 19% after this raise. The thing is, Lata, that as the CEO, I have 2 very big responsibilities: to run a super safe bank. Super safe bank. Super safe bank is how diversified deposits are, etc., and how quality of loan book is good. All that is super safe. But capital is a very, very important part. I take that as a responsibility. And even though we were 16 plus, I have to be honest, I wanted to raise more capital.
And moving on, Indian bond prices continue to soar, touching a fresh 3.5-year high, and 10-year yields fell to a low of 6.37%, following lower than expected inflation readings and some fall in the US yields too. Lata has more details on this one. Afternoon, Lata.
Yes, this is a further fillip that bond prices have got since the inflation numbers for March came on Tuesday. We saw the rally actually start on Wednesday itself when the 10-year bond prices rose and the yield fell below the 6.4% mark, which is the lowest level we have seen since December 2021. So basically from 2021, this is the lowest level we have seen. Bond prices actually have been rising in India from January 15, the day when, if you remember, Reserve Bank announced that massive liquidity injection in various ways, forex swaps, OMOs, repos, and that has continued. Actually, the Reserve Bank is continuing to supply money through what we call daily VRRs, variable rate repos. That is, they just stand ready to offer banks any amount of money that they are asking for practically. They're also doing OMOs. Recently, they announced 40,000 crore of OMOs. So the attitude of the Reserve Bank is that we are going to provide liquidity even when the call rate fell below the repo rate. The mandate is that the call rate should align to the repo rate, but call rate or the interbank, the rate at which banks borrow from one another for one day, that is falling below the repo rate at several points, and still RBI is continuing with its repo. So that's giving market the confidence that yields can go further lower. Plus, we've started seeing FPI flows this week. They had slowed a bit, and now we have again, the last 2-3 days, started seeing foreign flows into bonds as well, or rather more so in bonds. In fact, the overall view of foreign funds has become that even if US yields rise, Asian yields won't rise because there is clear disinflation in Asia. Already prices are falling, and the expectation is that as Asia, especially countries like China and Vietnam, are allowed to export less to the US, those goods will, find a home in Asia itself and drive prices down further. So foreign funds are extremely bullish on Asian bonds, and that includes Indian bonds. In fact, we spoke to Florian Neto, the chief strategist at Amundi, a very big fixed income investing fund. And this is what he had to say about the attractiveness of fixed income instruments in Asia and India.
The inflation issues that we have in the US, and we've seen Jerome Powell mentioning about this in your show just before, we don't have the same inflation issues in Asia. Headline inflation in India has been coming at 3.3, quite lower than the threshold of 4% from the RBI. And it's not an India story. It's the disinflation story is in Asia. So we like Asian rates, and we see that investors are turning a bit more constructive on Asia rates. When you hedge yourself, when you go on Korean curve, on Chinese curve, and you hedge the currency, you're actually having a higher carry than in the US. And we do believe that the central banks in the region have a I would say, are less in the corner than what the Fed is facing today with potentially stagflationary environment. Growth will be slightly lower. Inflation will be slightly lower in Asia. FX is still relatively resilient because the dollar is in a bit of a free flow. So at the end of the day, we do think that there will be more cuts in the region.
Okay, on that note, we're going to submit a very short break, viewers. Don't go anywhere, because after the break, we'll come back and give you more news and updates. Welcome back to Business Lunch on CNBC-TV18. Now let's move on. And amid the Gensol fiasco, SEBI chairperson Tuin Kanta Pandey bats for a greater corporate governance standard in corporate India. Listen in to what he had to say.
So governance failures in large corporates can have ripple effects across the market and economy. Preventing such failures is essential to maintaining financial stability. By mandating disclosures, board structures, and oversight mechanisms, we aim to create a self-regulating environment that encourages ethical and responsible corporate behavior. We are conscious that over-regulation can stifle growth and innovation. At the same time, too little regulations can also lead to decline in trust of stakeholders and adversely impact growth. Thus, there is a need for optimum regulation. Regulations need to be rationalized by removing what is no longer relevant and reducing overlaps. Stable and adequate financial regulation can help in creating a high-trust environment, increase attractiveness for investors, and promote economic growth. What we can do about effective self-regulation by entities? We need to move from a thinking of minimum compliance to maximum governance. Boards must rise above routine and ask difficult questions, and auditors and independent directors must act as gatekeepers of integrity.
Okay, that was the SEBI chairperson, but let's move on. And Federal Reserve Chair Jerome Powell expressed concerns that the central bank could find itself in a dilemma between controlling inflation and supporting economic growth. Speaking at the Economic Club of Chicago, Powell pointed to President Donald Trump's tariffs as very likely to hurt the economic growth and cause higher inflation. Listen in.
The level of tariff increases announced so far is significantly larger than anticipated, and the same is likely to be true of the economic effects, which will include higher inflation and slower growth. Both survey and market-based measures of near-term inflation expectations have moved up significantly, with survey participants pointing to tariffs.
Okay, on that note, we're going to slip into a very short break. But as we slip into the break, here's some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app, get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or you can just scan the QR code on your screen. Welcome back to Business Lunch on CNBC-TV18. Now let's move on. The US travel and hospitality industry is facing a downturn with a noticeable drop in foreign visitor numbers. Partially, this was due to the policies targeting illegal immigrants. Now we have Madhya, who's joining in with us to give us more details of this one. Madhya?
Well, the drop in arrivals doesn't augur well for the U.S. travel and hospitality industry. The Trump government intended to target illegal immigrants living in the U.S., but as per data on different platforms, their rules and policies are keeping many people away. An analysis by American news portal Axios shows a 20% year-on-year drop in the number of foreign tourist arrivals at 10 busiest airports in the U.S. in March. According to data published by International Trade Administration, total arrivals into the U.S. saw an 11.4% year-on-year decline. Arrivals from Mexico were down nearly 23%. From Central America, arrivals dropped 24%. From Western Europe, the decline was 17.4%. Now, if we look at arrivals through all modes of transport into the US, then Germany saw a decline of 28%, UK saw a drop of over 14%, India and China, while less dramatic, also posted drops in arrivals. A major drop is from Canada. Several Canadians dropped their travel plans to US. As per Statistics Canada, return trips by land fell by nearly 32%, and by air, the visits fell by 13.5%. So what is discouraging travelers? Few factors could be rising global tensions, policy changes, reports of detainment or harassment at borders. Countries like Canada and China have issued travel advisories, especially for transgender travelers. Now, travel policy changes like stricter visa requirement, mandatory registration for stays over 30 days, harsher penalties for overstaying visas are deterring travelers. The rule stating that passports must reflect the holder's biological sex, recognizing only male and female under federal guidelines, is also adding to the caution. In India, travel agents say that even green card holders are hesitant to travel home, fearing scrutiny upon return. Many are deferring US trips altogether unless absolutely necessary. Foreign tourists are a big contributor to the travel and hospitality industry in the US, and the drop in numbers is painting a worrying trend.
Thank you so much for that, Madhya. But a quick look at the market as well. Today, we are seeing that Nifty Bank, that is doing quite well. Now, just almost 100 points away from its record high levels. We've seen those flashes coming at the bottom of the screen from our ticker team as well. And I was reading that Nifty Bank is 13% up from its recent lows that was on March of 11th. So that is interesting to watch out for. As of now, Nifty Bank almost at the day's highest point is what it's trading at. And Nifty also continuing to gain its momentum that we've seen. And at the day's highest point is what the Nifty 50 is trading as well. Banks, particularly ICICI Bank, HDFC Bank, have hit record high levels. So keeping an eye out on that as well. That's the market setup that is right now. Also, in terms of the green that we're seeing on the screen, and momentum is not stopping as of now for today's trading session. But let's move on. And OpenAI that has launched a new AI reasoning model, O3 and O4 Mini. Now, the products which are developed focused with an improvement in coding abilities. Now, ChatGPT is also gaining immense traction in India, with users tripling in 2024 to become OpenAI's second largest global market. As a part of our Global Dialogue series, CNBC-TV18's Shireen Bhan spoke with Kevin Weil, the Chief Product Officer at OpenAI, to discuss their plans for the Indian market and the Ghibli image generation tool, which was and has gone viral in the country as well. Listen in to that conversation.
Let me start by asking you, Kevin, to give us a snapshot in very simple language. What does ChatGPT 4.1 mean for OpenAI and for consumers? And how do O3 and O4 Mini change the game?
Yeah, well, first of all, thank you for having me. I really appreciate it. We're excited to be here with you. India is an incredibly important market for OpenAI and ChatGPT. It's our second largest market, it's our fastest growing market, and it's also the market where we saw our image generation just take off. But we had some great launches this week. You mentioned GPT 4.1, which was a model for developers that is fantastic at coding and complex instruction following. And so, for that was a model that we released focused on developers, and we're seeing them. We have over 3 million developers on the OpenAI platform, and they're doing amazing things. That is one of our fastest growing models by usage ever. And then just this morning in the US, we launched O3 and O4 Mini, which are our frontier reasoning models. They're the smartest, fastest, safest models that we have ever launched. They're incredible at things like computer programming. So if you look at measures like on competitive coding benchmarks, these models would be better at competitive coding than all but about 200 people in the world. And they can answer hard PhD level science questions better than 80% of PhDs in their field across all fields simultaneously. So they're really very intelligent models, but you can also use them for, more mundane tasks, understanding, medical jargon, or looking at what's happening in the world, creating images, helping you with writing, translating languages. These models are so dynamic, and we're super excited to see what people can do with them.
Let's talk about what you're seeing in India. You talked about how it is today your fastest growing market for ChatGPT. How many active users do you have in India? What surprised you about the adoption, the rate of adoption, the pace of adoption in India? Why do you believe you've seen this kind of an uptick here?
Yeah, I mean, our active users in India more than tripled in 2024. So it's been incredible to watch. A few weeks ago, we launched a new image generation tool using AI to generate incredibly, images that you can control to a great degree, whether you want them to be vivid and lifelike or cartoony or following a particular style. We saw, Prime Minister Modi tweeted using our image gen feature. We had cricketers like Sachin Tendulkar tweet images from ChatGPT. And it just took off. I mean, unlike anything I've ever seen. I've been fortunate to be at Twitter for many years. I led product at Instagram for a number of years. I mean, these companies were growing very quickly. I have never seen anything grow like ChatGPT was growing, because people were having so much fun creating these images, sharing them with their friends, on WhatsApp and in other places. And it's just incredible to see. So we marshaled a whole lot of resources. We really tried to support it. Especially in India. We released new features around our image gen, like image galleries that let you quickly view all of the images that you've created. There's just a huge amount of excitement in India for ChatGPT, and not just for this image gen feature, but also, ChatGPT speaks 100 languages. It can teach you any subject you want to learn. It can save you time at home and at work. And so, it's so broadly useful, and it's completely free. You don't have to pay us a dime. You can use it on an Android phone for free. So it's just, we deeply believe in bringing AI to the world and in the positive impacts that can make. And I can't think of a better example than, what's happening in India right now with ChatGPT.
You can catch the entire conversation with Kevin Weil this evening at 5:30 p.m. only on CNBC-TV18. And with that, we're absolutely out of time on this edition of Business Lunch. Thank you so much for tuning in. Up next, your Midcap Radar.